People ask me all the time what separates the winners from the losers in this game. They expect me to talk about capital, or connections, or some secret system I've developed over the years. But I'll tell you something that might surprise you. The biggest enemy most traders face isn't the market at all. It's the 3 pounds of gray matter sitting between their ears. I've watched more fortunes destroyed by overthinking than by any bear market or panic you can imagine. I learned this lesson the hard way, and it cost me dearly more than once. There were times when I had the position, I had the timing, I had everything lined up perfectly, and then I started thinking. Not the good kind of thinking, mind you, not the careful analysis that comes before you place a trade. No, I'm talking about that poison that seeps in after you've made your move. That endless loop of second-guessing, reconsidering, imagining every possible disaster that could unfold. The first time I really understood this, I was still a young man. I'd made a beautiful play in Northern Pacific, and the stock was moving exactly as I'd anticipated. Everything in the tape, everything in the market's behavior told me I was right. But instead of sitting tight, which is what I should have done, I started thinking, what if this? What if that? What if the papers were wrong about the earnings? What if there was some piece of information I didn't have? I tortured myself with questions that had no answers, scenarios that existed only in my imagination. And you know what happened? I got out too early, took a small profit when I should have made a killing. The stock kept climbing for another 3 weeks, and I sat there watching it, kicking myself. But here's the thing that wasn't even the worst part. The worst part was that I'd violated my own principles. I'd had a plan, I'd executed it perfectly, and then I let my overactive mind sabotage everything. See, overthinking isn't the same as careful consideration. When you're planning a trade, you should think it through from every angle. What's my entry point? What's my stop? What's the market telling me? What's the tape showing? That's constructive thinking. That's the work. But once you're in the position, once you've done your homework and placed your bet, that's when most traders start destroying themselves with thought. It's a peculiar form of self-sabotage, and I've seen it in every successful trader I've ever known, including myself. We build these elaborate scenarios in our minds. We start imagining all the ways we could be wrong. We begin to doubt the very analysis that brought us to the trade in the first place. And the market, that cruel teacher, has a way of making you pay for this kind of mental weakness. I remember watching a fellow trader once, brilliant man, really knew his business completely fall apart because he couldn't control his thoughts. He'd bought a substantial position in a railroad stock, and every indicator said he was right. The fundamentals were sound. The technical picture was perfect. Even the market sentiment was turning his way. But every single day, he'd come up with a new reason to worry. One day it was the weather affecting shipments. The next day, it was some minor political development in Washington. The day after that, he was convinced that other traders knew something he didn't. He'd wake up in the middle of the night, his mind racing through scenarios that had maybe a 1% chance of actually happening. He wasn't analyzing anymore, he was just spinning, trapped in his own head. Eventually, he sold out at almost exactly the bottom of a minor dip, just days before the stock began a major move upward. He'd been completely right in his analysis, but his overthinking had transformed him from a confident operator into a nervous wreck. The thing is, the market doesn't care about your internal dialogue. It doesn't care that you spent 6 hours last night imagining every possible disaster. It's going to do what it's going to do, based on forces much larger than your worried thoughts. And while you're sitting there overthinking, other traders, the ones who can control their minds, are making money. I learned to recognize the signs of overthinking in myself. There's a certain quality to it, a certain feeling. It's different from legitimate concern based on new information. When you're overthinking, you're not responding to anything real, you're just generating anxiety out of thin air. You're asking questions that can't be answered. You're imagining scenarios that become more elaborate and unlikely with each passing hour. One of the worst forms of overthinking is what I call phantom pattern recognition. You start seeing patterns that aren't there. You begin to believe that because something happened one way in the past, it must happen that way again. Or you convince yourself that you've spotted some subtle signal that nobody else can see, not because you've done better analysis, but because your nervous mind is desperate to find some reason, any reason, to act. I've had nights where I couldn't sleep, where my mind kept running through the same scenarios over and over. What separated my success from my failures wasn't eliminating those nights. That's probably impossible if you're trading with serious money. What made the difference was learning not to act on those thoughts. Learning to recognize them for what they were, just noise, just mental static, just my own fear trying to dress itself up as wisdom. The tape tells you what you need to know. The market's action tells you what you need to know. Everything else, all that churning, all that worry, all those elaborate scenarios you construct at 3 in the morning, that's just your mind working against you. That's overthinking, and it's killed more traders than any market crash ever has. Now, here's where it gets really interesting. And this is something I only understood after I'd made and lost several fortunes. Overthinking doesn't just affect your current trade, it poisons your entire relationship with the market. It's like a disease that spreads through your trading psychology, infecting every decision you make going forward. When you overtrade your thoughts instead of trading the market, you start making decisions based on fear rather than analysis. You begin to see danger everywhere. A normal, healthy pullback looks like the beginning of a collapse. A consolidation period feels like the market is about to turn against you. You lose your ability to distinguish between genuine warning signs and the ordinary fluctuations that are part of any market movement. I went through a period, this was after one of my big losses, where I couldn't trust my own judgment anymore. Not because my judgment had gotten worse, but because I'd overthought myself into a state of complete uncertainty. I'd look at a setup that had all the hallmarks of a winning trade, the kind of opportunity I'd capitalized on dozens of times before, and I'd freeze. My mind would immediately start generating reasons why this time was different, why this time I'd be wrong. What had happened? I'd trained myself to overthink. Every time I'd second-guessed a good position in the past, every time I'd let my overactive imagination talk me out of a winning trade, I'd reinforced a destructive pattern. I was no longer operating as a trader, I was operating as a worrier who occasionally made trades. The irony is that overthinking often disguises itself as diligence. You tell yourself you're being careful, that you're considering all the angles, that you're being responsible with your capital. But there's a world of difference between careful analysis and mental paralysis. Careful analysis has an endpoint. You gather information, you make a decision, you act. Overthinking has no endpoint. It just cycles and cycles, generating more questions, more doubts, more anxieties. I've known traders who could tell you everything about a stock, the company's history, its financial statements, the backgrounds of its executives, the technical patterns going back years. They'd done so much thinking, so much analysis, that they knew more about the company than its own board of directors. And you know what? They couldn't make money. They were so lost in their thoughts, so buried in their analysis, that they couldn't see what the market was actually doing right in front of them. The market operates in the present moment. It doesn't care about your thesis, your research, or your elaborate theories. It's showing you, right now, what it's doing. The tape is telling you a story in real time. But if you're trapped in your head, running through scenarios and second-guessing yourself, you can't hear what the market is saying. You're having a conversation with yourself instead of listening to the only voice that matters. There's a particular kind of overthinking that's especially dangerous, and I call it trade replay syndrome. This is when you can't let go of past trades, especially the ones that didn't work out. You replay them in your mind, imagining all the ways you could have played them differently. If only you'd gotten out earlier. If only you'd held on longer. If only you'd seen that signal you now convince yourself was obvious. This kind of thinking is worse than useless. It's actively harmful. First, because you're dealing with incomplete information. You're looking at the past with knowledge of how things turned out, which makes everything seem clearer than it actually was at the time. Second, because you're training your mind to focus on regret rather than learning. And third, because while you're busy replaying yesterday's trades, you're missing today's opportunities. I lost a significant sum once by ignoring a clear signal in the market. all because I was still mentally trapped in a trade from 2 weeks earlier. I kept thinking about what I should have done differently, how I should have seen the reversal coming. And while I was lost in that mental maze, the market was setting up a perfect opportunity in another stock. By the time I noticed, the best part of the move was over. The mind has this tendency to make everything complicated. It wants to find hidden meanings, secret patterns, complex explanations for simple movements. But most of the time, the market is fairly straightforward if you can just quiet your mind enough to see it. A stock in a strong uptrend, supported by good volume, with no signs of distribution that's not complicated, that's just a stock going up. You don't need to overthink it. You don't need to imagine all the ways it could reverse. You just need to ride it until the market tells you it's time to get off. One of the most liberating discoveries of my career was realizing that I didn't need to have an opinion about everything. I didn't need to analyze every stock, predict every market turn, or understand every fluctuation. In fact, the less I thought about the things that didn't matter, the better I traded. I learned to focus my mental energy on the few things that actually mattered: the overall market trend, the behavior of my positions, and the clear signals that indicated when to act. Overthinking also manifests in what I call analysis paralysis during execution. You've done your homework, you know what you want to do, but when it comes time to actually place the trade, you freeze. Your mind starts throwing up objections. Maybe I should wait for a better price. What if I'm missing something? Perhaps I should do just a little more research. Before you know it, the opportunity has passed, and you're left holding nothing but regrets and a head full of useless thoughts. The truth is, no amount of thinking will ever give you complete certainty. The market doesn't offer certainty, it offers probability. If you wait until you're absolutely sure, until you've thought through every possible scenario and eliminated every possible risk, you'll never make a trade. And that's exactly what overthinking does to traders. It transforms them from actors into spectators, from participants into philosophers. I've seen this happen to some of the brightest minds I've ever encountered in this business. Men who could analyze a balance sheet like nobody else, who understood market dynamics at a profound level, who had every intellectual tool they needed to succeed. But they couldn't stop thinking long enough to act. They turned trading into an academic exercise, an intellectual puzzle to be solved, rather than a practical discipline to be executed. So how do you fight this? How do you stop your own mind from becoming your worst enemy? I'll tell you what I learned through years of painful experience, through fortunes made and lost, through nights of worry and days of triumph. First, you need a system, a real system, not just a vague approach or a collection of hunches. Your system should tell you when to enter, when to exit, and how to manage the position in between. Once you have that system, and once you've tested it and trust it, you need to follow it. Not most of the time, not when it feels right, all the time. The system is there precisely to save you from your overthinking mind. When I'm following my system, I don't need to think about whether I should hold or sell. The system tells me. The market's action tells me. If the stock hits my stop, I'm out, no thinking required. If it's moving in my favor and showing no signs of trouble, I hold, no thinking required. The system takes the burden of decision-making away from my overactive imagination and places it where it belongs, on objective market behavior. Second, you need to develop what I call mental discipline. This is different from trading discipline. Trading discipline is about following your rules. Mental discipline is about controlling your thoughts. When you notice yourself starting to overthink, and you will notice it if you pay attention, you need to actively stop. I don't mean suppress your thoughts or pretend they're not there. I mean consciously redirect your attention away from unproductive speculation and back to observable reality. What is the market actually doing right now? Not what might it do, not what you fear it might do, not what happened last time in some similar situation. What is it actually doing right now? That's the only question that matters. The tape doesn't lie. The price action doesn't lie. Everything else is just noise generated by your nervous system. Third, you need to accept uncertainty as a fundamental condition of trading. This might be the hardest lesson of all, because we're all desperate for certainty. We want to know that we're right, that our position will work out, that we've covered all the angles, but that certainty doesn't exist. Every trade is a bet made with incomplete information. Every position carries risk. No amount of overthinking will change that. When I finally accepted this, really accepted it, deep in my bones, something changed. I stopped trying to eliminate uncertainty through endless mental gymnastics. I stopped trying to think my way to absolute confidence. Instead, I accepted that I was going to be uncertain, that I was going to be wrong sometimes, that losses were part of the game. And paradoxically, accepting uncertainty made me a much better trader. I could act despite my doubts, because I understood that doubts were always going to be there. I also learned the value of action over contemplation. Not reckless action. Mind you, I'm not advocating that you trade impulsively or without preparation. But once you've done your homework, once you've identified your opportunity, you need to act. Taking action, even when you're uncertain, even when part of your mind is screaming objections, is what separates successful traders from eternal researchers. There's something almost magical that happens when you act. All that mental energy that was spinning in useless circles suddenly has direction. All those worries that seemed so important suddenly reveal themselves as the phantoms they always were. You're no longer trapped in your head, you're engaged with reality, with the actual market, with real price movements and real opportunities. I've had trades where I was nervous going in, where my mind was throwing up every objection in the book, but I followed my system anyway. And you know what happened? Most of the time, once I was in the position, the overthinking stopped. My mind had something real to focus on. I wasn't imagining scenarios anymore, I was managing an actual situation. And the discipline of managing a real position is far healthier than the torture of endlessly considering hypothetical ones. Now, I want to be clear about something. I'm not telling you to stop thinking. Thinking is essential. Analysis is essential. What I'm telling you is to think at the right time and in the right way. Think before the trade. Do your homework. Understand what you're looking for. Set your parameters. Make your plan. That's productive thinking. But once you're in the trade, stop thinking and start observing. The market will tell you if you're right or wrong. Your job isn't to anticipate every possible future scenario, it's to respond appropriately to what actually happens. That's the difference between a trader and a worrier. Over my career, I've made millions and lost millions. I've been hailed as a genius and dismissed as a fool, sometimes in the same year. But the pattern I've noticed is this. I made money when I could control my mind, when I could separate useful analysis from destructive overthinking. I lost money when I got trapped in my own head, when I let my imagination run wild with fears and doubts. The market is hard enough without fighting yourself. The obstacles are real, the unpredictability, the competition, the natural disadvantages of being a speculator. But of all the challenges you'll face, none will be more persistent or more dangerous than your own tendency to overthink. Here's what I want you to understand. You are not your thoughts. Your thoughts are just mental events, neural patterns firing in your brain. Some of them are useful, many of them are not. The successful trader learns to distinguish between the two. They learn to listen to the thoughts that come from careful observation and ignore the thoughts that come from fear, anxiety, or unproductive speculation. Every morning, before I look at the tape, I take a moment to clear my mind, not to fill it with predictions or expectations, but to empty it, to come to the market fresh, ready to see what's actually there rather than what I imagine might be there. This simple practice has saved me more money than any technical indicator or secret system ever could. So here's my challenge to you. For the next week, pay attention to your thoughts while you're trading or watching the market. Notice when you're engaging in productive analysis and when you're just spinning. Notice when your mind starts generating elaborate scenarios about things that haven't happened. Notice when you start doubting good positions or talking yourself into bad ones. Just notice, without judgment. Because awareness is the first step. Once you can see your overthinking clearly, once you can recognize it as it's happening, you can begin to control it. And once you control it, Once you can quiet that overactive mind and focus on what actually matters, you'll discover something remarkable. Trading becomes simpler. Not easier necessarily, but simpler, clearer, more direct. The market is there, speaking to you in the language of price and volume, telling its story day after day. But you can only hear it if you quiet the noise in your own head. You can only see it clearly if you stop projecting your fears and fantasies onto it. This is the work. This is what separates those who make it from those who don't. Not intelligence, not capital, not connections, the ability to control your own mind, to think when thinking is called for, and to be still when stillness is required, to analyze when there's something to analyze, and to observe when there's something to observe, to act when action is needed, and to wait when waiting is wise. I've given you the lessons I learned the hard way. Now it's your turn to apply them. Stop overthinking. Start trading. The market is waiting, and it rewards those who can master not just its patterns, but their own minds. If this resonated with you, drop a comment below telling me about a time when overthinking cost you a good trade. Let's learn from each other's experiences. And make sure you watch our other videos on this channel. Each one contains lessons I learned through years of hard experience in the markets. Before you go, I want you to know about something special we've put together. It's an ebook called Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. In it, we've distilled everything I've learned about the mental game of trading, the discipline, the patience, the risk management that separates winners from losers. The link is in the description below. Get it, study it, apply it. Your trading account will thank you. Now stop overthinking and start taking action. The market doesn't wait for anyone.